RSI is a line that compares recent up moves with recent down moves, but standard RSI is raw and highly sensitive. A single red candle can make the line drop sharply, tricking you into thinking the trend has reversed when it is only pausing. So do not ask only, did RSI just drop? Ask, has the core momentum actually shifted? In this video, we compare standard RSI with QQE. QQE cannot remove uncertainty or predict the next move. It starts with RSI, makes it smoother, then adds a slower line that follows the fast line from a distance. This can make the chart easier to read, but it cannot promise a better trade. We will use 3 simple checks. Know what the 2 lines mean, wait for the candle to close after a cross, and use 30 and 70 as background information, not as commands to trade. Welcome to Chart Science. Each week, we break down a TradingView indicator, evaluate how it works, and give it a clear design and education score. Today, we are reviewing QQE. This script shows 3 main visual parts. Fast is RSI, smoothed with an EMA, an average that weighs recent candles more. The default smoothing setting is 5. Slow follows fast from above or below. The 50 line is the middle baseline. When fast crosses slow, the script draws a buy or sell label. When fast crosses the 50 line, it simply shifts between bullish and bearish territory. Do not confuse the two. A cross of the 50 line does not print a trade label. Also, traders often look for divergence to spot reversals, but this code does not detect it automatically. It does not compare price highs with indicator highs. If we show divergence, it is our own chart observation, not a QQE signal. The calculation has a simple path. Price becomes RSI, then an EMA smooths it. The script measures how much that smooth line moved since the prior candle, then smooths that number twice. This gives a rough measure of recent movement inside RSI. The code multiplies that measure by 4.236 to set guidelines above and below fast. Slow follows a guideline instead of every small wiggle. The gap widens when fast moves more and narrows when it slows. That is what adaptive means here. It does not predict where price must go. There is one source detail to notice. RSII and QQEF have different names, but use the same calculation. An EMA of RSI. TR measures the latest fast move. WWMA and ATRRSI calm it down in 2 steps. QUP and QDN are the upper and lower guidelines. The code remembers where slow was on the previous candle. That stops it jumping on every new bar. After fast gets through slow, the slow line can flip to the other side. This filters tiny moves, but can make a signal late when price turns sharply. RSI length and smoothing matter most. A longer length or more smoothing slows the line and can delay crosses. The 4.236 multiplier changes the gap, not signal strength. Change 1 setting per test. The code uses one event. Fast above slow draws a buy label. Fast below slow draws a sell label. That is what the script displays, not an order to trade. A live label is not final. Before the candle closes, price can change, the lines can separate, and the label can disappear. Wait for the close, then check whether the cross remains. Only then look at the price area, trend, or 30 and 70 lines. The QQE code draws 50, not 30 or 70. Add those lines in the indicator's style settings. Where the license allows it, You can add them to a private code copy. They do not change QQE. They only show whether the RSI-based line is near an extreme area. Reaching 70 or 30 is a reason to pay attention, not proof that price must turn. Use the lines to ask for more evidence, not to force an entry. Price is pushing higher. We do not sell just because QQE reaches a high level. Fast hits 70 while price is still rising. That is an alert, not a trade decision. Next, fast crosses below slow. The candle closes and the cross remains. Now we have a confirmed event. Price then moves lower. One example cannot tell us how often this works. It simply shows an order of steps. Notice 70, wait for the cross, wait for the close, then watch what price does next. We do not call the first touch of 70 an entry. We wait for the lines to cross and the candle to finish. Later, candles show whether price kept moving down, but one chart does not prove this pattern will repeat in another market or time frame. In a strong uptrend, especially in highly volatile markets, QQE can stay above 70 for a long time. A move below slow may be short, late, or followed by another rally. The same can happen below 30 in a long decline. The slow line can filter small moves. It cannot tell whether a pullback will become a reversal. A touch of 30 or 70 does not prove the move is over. The 4.236 setting is a code choice, not a rule for every market. Test more than one symbol and time frame. Keep the data source, date range, and settings fixed. Compare like with like. In a sideways market, expect more crosses. When price starts moving sharply, the gap can widen and signals can arrive later. Record that. Do not claim QQE beats RSI everywhere. QQE is a momentum indicator. When market momentum dies, the math simply loses its edge. In a tight sideways market, the fast line will hover around the 50 middle line. It will cross the slow line over and over. You will see buy and sell labels appear back to back, and nearly all of them will lead to losses. No indicator setting can fix a market that is not moving. If price is stuck in a box, a QQE cross is just a mathematical reaction to noise. This is why you must look at the price structure first, before you look at the indicator. Our final score is 7.2 out of 10 for design and teaching value, not profit or future returns. QQE makes RSI smoother and adds a slow line that can make crosses easier to see. But the code has no 30 or 70 lines, does not find divergence, and still needs a close check. This video does not test profitability. Remember, 30 or 70 is an alert. A fast and slow line cross is an event. The candle close tells you whether that event remained.
Indicators do not drive the market. They only summarize what has already happened. Your edge comes from knowing how the math works, where it breaks down, and how to manage the risk when it fails. This video is strictly educational and is not financial advice. Build your own strategy, test your own data, and click the video on screen to continue your journey with chart science.